Can you hear us? Check, check.
I can.
Awesome, thanks.
Okay, it is now 3:39 PM, and this meeting of the other Post-Employment Benefits Trustees Committee of Washoe County School District is now called to order. Welcome, everyone. Mindy Capron is filling in for staff here, and I think you're prepared to do roll call, Mindy?
I am.
Okay,
Mark Mathers,
here?
Jeff Hurst,
Here.
Mary Lamont,
Here.
Fran McGregor.
Here.
Was that me, Alex
Yes,
Taylor?
Alex Taylor, sorry.
Yep, I'm here.
Okay, thank you, everyone's here.
Okay, thanks, Mindy. We'll move on to section 2 of the agenda. And our first agenda item is for possible action, and that item is approval of the minutes of June 26, 2025. Do I have any corrections to those minutes?
Jeff Kirst. I just had one question with Alex Taylor, if he was with the Giants and the 49ers, or was it or the 49ers?
It was the 49ers.
So not the Giants. So we should change that.
Yes, we will change that then, yes, with the 49ers. Yes, very important. Because some people might think it's the New York Giants, and that would probably be a problem. Okay. We'll make that change. Do I have then a motion to approve the amended minutes then of June 26, 2025? I'm sorry. I keep forgetting. Do we have any public comment on these minutes? Come on, you guys. Oh, okay. Seeing none, hearing none, do I have a motion to approve the amended minutes?
I have a motion that we approve the amended minutes from June 26th, 2025. Mary Lamont.
Okay, is there a second?
Second, Fran McGregor.
Very good. Any further discussion? Seeing none, all those in favor say aye. Aye. Okay, motion. Very good. Thanks, Alex. Motion passes unanimously. We will now move on to, presentation by our Office of General Counsel on Nevada Open Meeting Law. This is for a presentation only. And with us to do that presentation is our famous, renowned Chief General Counsel, Kevin Pick. And in your packet is a memo from the Office of General Counsel giving an overview, and I think Kevin's going to go over this. And again, I always think it's good to have a refresher on open meeting law. This is a public body. We must conform and comply with open meeting law. And so Kevin will give us a little bit of training on this issue.
Thank you very much, Chief Mathers. It's really great to see everyone. I'm Kevin Pick. I'm General Counsel. I'm a labor and employment lawyer by trade, but here at the district, we do get to do, we represent all the subcommittees of the Board of Trustees, and as a subcommittee of the Board of Trustees, the Nevada Open Meeting Law does apply to all of our committees. So the Group Insurance Committee, the Safe Schools Committee, they all fall under Nevada's Open Meeting Law, and what that means is we need to follow OML, otherwise we could be found in violation of it, and if you're found in violation of it, any action you took is void. So it's important that we obviously follow it because it's the law, but in order to preserve the important decisions you all make, it's important that we follow it. Otherwise, it could be invalidated later on. So Mindy, if you want to go, could you go to the first page here?
I don't do this very often.
That's okay. It's, you all have the packets in front of you. The first page we're looking at is on the PowerPoint presentation. It says changes to agendas. Yes, we can make copies of that. It's, I saw it on the meeting materials for the online version. And so Mindy, I don't know if you're able to go on to the online version. At least we can have it up here.
Okay. Well, I'm really being tested here.
We will do our best, and we will be very good listeners. And if you have any questions, this is a training, but it's also a dialogue. And so if you have questions along the way, please do ask them. This is really your time to seek clarification on this. As far as agendas, each one of these meetings obviously has an agenda. You've all have seen those. Things that go into it are items that are for discussion and for action. There's also a lot of other important items in an agenda. If you've ever looked through the fine print, the first, it prohibits the disruption of a meeting. It's actually a criminal offense to disrupt a public meeting, and we actually specify it in every agenda we send out, where we specifically say it's a criminal act, and we cite the criminal statute for violating an open meeting, and it's members of the public come in, it's public commenters who disrupt the normal effective flow of the meeting. We are allowed by law to regulate that if it crosses a certain line. Agenda items is also one of the other important parts of an agenda. We specifically say in there that agenda items can be taken out of order or combined with other agenda items. Because we say it in the agenda, we are allowed to move items around, and because we have that in the agenda. Now, public comment, it's required under Nevada open meeting law for every action item, and it's also generally required too. And so what we do at all of our meetings is whenever it's public comment, there will be literally a slide up on the monitors here in this room that talks about public comment and has the important rules of public comment. And also the rules of decorum that are applied before the board also apply to all the subcommittees. And so if a public commenter came in and they were out of line in a certain way, they were using profanity, they were threatening staff, they would be able to be removed in the same way the Board of Trustees could remove someone who was disrupting the effective course of the meeting. Ways to challenge that, or ways how to handle that, and this is really important for the chair of the committee, is we provide a warning first and to the person being disruptive, and then if that behavior continues, then the meeting is recessed. And so everyone on the committee will simply leave, and they leave through that door over by the side. Mark will gavel the meeting, call the recess, everyone will leave until the situation is resolved. It's important for meetings that all the subcommittee meetings really do occur during normal business hours. And they're normal business hours for a reason. And one of the main reasons is that otherwise school police would have to be scheduled to be here specifically if it's after hours. A lot of the board meetings do go after hours, and so that's why school police is there. School police is stationed in the central administration building, so if it's during work hours, school police are here. But if a meeting would ever be scheduled for after hours, even OPEB, there would need to be reaching out to the school police to make sure that someone is stationed in case we need them, because again, these are all accessible to the public. Now, Nevada open meeting law, it's really it begins and ends with what is a meeting and what is a quorum. And so it's an elected body or an appointed body like yours. It's appointed by an elected body. It's subject to Nevada's open meeting law. And it prohibits meeting as a quorum without a publicly listed agenda. And really, it's the whole purpose of the open meeting law is to give the public notice of what you're doing and an opportunity to come and observe you. And if it's an action item, to participate through public comments or to give a general public comment. And so it ensures public participation and consideration and public monitoring and transparency of what does happen in a public body like this. For action items, a quorum is a majority of the spots of the positions that are eligible to be filled by appointees. So there's 5 positions on OPEB. That means the quorum, what's a majority of 5? The majority is 3. And so in order for there to be a quorum present here, there always has to be 3 members present. In order to take action, it's interesting, it doesn't actually have to be 3 people to take action. It just has to be a majority of those present in order to take action on an item. If you had 4 and 4 and it was at loggerheads, that means an action item doesn't proceed. If 2 vote against it and 2 vote for it, that means it's dead. If we have 5 members, 2 were not here, you would need 2 votes yes on something to move an action item forward. So it shifts down. Elected boards are not like that. The Board of Trustees is under different rules. They have to maintain a voting majority regardless of how many people are or are not present. So they have to have 4 votes yes, regardless of how many people are there. If they had 5 trustees, they would have to have 4 yes votes to pass an action item. That's not the same case for you all because you're not an elected board. Now, let's see here. Now, the agenda is really kind of our roadmap for these meetings, and obviously the agenda has to be, any action items listed on there or for discussion has to be within the purview of the board. The board can't make decisions on school naming or, the rate of employee health insurance, things like that are outside OPEB's charge responsibilities. And so when things are agendized, it needs to be within the scope of the OPEB's authority to do and within its purview. And all the action items are listed for possible actions. That way you know what is going to be voted on. Otherwise, it's just going to be for presentation and discussion only. Really, the big thing for you all to remember is make sure when you have an agenda item that you're sticking to that agenda item. Because if you exceed the agenda item, all of a sudden the public doesn't have notice of whatever you're now talking about. And so if you go off the agenda and deliberate on something that was not noticed, it could be an open meeting law violation because the public isn't aware. So let's say you're approving the minutes for a past meeting. You can't go on to talk about future agendas that weren't the past meeting. A few minutes ago, we passed the June 26th meeting minutes. If we were talking about, I'd like to see this issue on future agendas, that would probably be actually outside the noticed agenda item, so we couldn't discuss that. It just has to be limited to the actual agenda item. It has to be germane to it. So if you want an item on the agenda that's not there, I'd work with the chair or the staff liaison to get it on there. It's just important that you don't copy your other committee members when you are requesting a subject to be added to the agenda, because all of a sudden, now it's a quorum. So if one of you emailed Mark and said, I want this on the agenda, and you copied all of your other committee members, that would be an open meeting law violation, because it was a quorum was assembled, but it wasn't noticed to the public. And so, so just never communicate except with your staff liaison.
Jeff Kirst, question. If you email the chair to have an item on the agenda, are you permitted to tell others on the committee that you have emailed the chair about putting an item on the agenda?
It depends on the manner in which you do it. And so that is my short way of saying it's better if you didn't. And I would rather you just email the chair and then have the chair make the decision on whether to do it or not. Or at that point, if it was unclear, what the chair could do is a chair could actually agendize an item on, should we bring this to a future meeting at that point, to again get input from the entire group in a noticed public meeting. So that's the careful way of doing it, and that's obviously the way I would prefer it to happen. But if you were, the first step was that was okay. You can always email the chair, just the two of you, because it's less than a quorum, and be okay. It's when you communicate that to other members, it becomes what's known as a serial or a walking quorum, serial communication or walking quorum, and I'm going to get into that in just a few minutes here. Actually, this is a good time to do it. So there's concepts like a serial communication or a walking quorum, which are essentially just ways to improperly circumvent the public notice process and in the transparency requirements there. Serial communications are one-on-one or small group communications that are less than a quorum. So I think, 2 people on your 5 committee talking, but that's used to deliberate and reach a consensus. So here's an example. So member A talks to member B about an issue. Member B then talks to member C about the same issue. Member A, B, and C have all shared input, even though they've never met in the same place or time. That possibly could form a walking quorum, and so we would want to avoid that sort of thing. But staff is always able to communicate with the members. I could go to you and I could say, hey, there's an important issue I need to talk to you about individually. Our fund manager is breaching their fiduciary duty. It's important for me to talk with you about it. And I could talk to Mark, and I could talk to each of the members individually about the same issue. But then I couldn't communicate to you, sir, that when I talked to Mark, he said this, because all of a sudden that would be establishing a quorum under those circumstances. The other one we do run into is walking quorums, and this is through chain communications. It's when you hit reply all in an email. And it's part of the reason when we communicate with the board, we do it through BCC. And that way they are not tempted to just hit reply all and inadvertently respond to everyone and thereby create a quorum where it's deliberated on. And so, again, this really gets back to your question too, is when you do communicate, make sure it's individual one-on-one communications and not as a group. We don't want to copy everyone on emails. An example of a walking quorum is member A calls member B on the phone and says, hey, I think we should approve this contract. It's cost effective. Member B, what do you think about that? And member B agrees. They say, yes, the contract is cost effective. Let's go through with it. And then member B gets off the phone and they text member C and they say, hey, A and I are in favor of doing this. Are you good with this? And Councilman C or member C replies, yeah, that looks good to me. Let's pass a contract. I think it's the best thing to do. That's an open meeting law violation. You can't do that. Think about it ways around the quorum requirements. And that is it gets complicated, it really does, and it's very case specific, but just think about it as general. The whole purpose of OML is to preserve that public transparency and make sure that there's not any behind the scenes decision making that's happening that really should be happening in public. And so just as long as you use that as your kind of guiding star, you'll always be fine with it. And if you have questions, I'm your lawyer too for this board. Reach out to me. If you have questions on OML, You know, I'm easy to find in the legal office. Call me, email me, and say, hey, I'm thinking about doing this communication, but I want to check that if it's okay. Please reach out to me. We are a resource to help you do your job. So not only during the meetings, but outside the meetings too. If you ever have questions about your role as a committee member, please reach out for OML questions. And I'll forward them to Neil, who's the real expert on OML, who actually wrote the manual for OML. It's my boss, Neil Rombardo, wrote the first manual for the Attorney General's office on it. So he's the real expert. So let me see. So the process for creating an agenda, it has to be posted. All agendas have to be posted 3 days before the agendized meeting, and so 72 hours really. It's down to the hour. And so if the meeting's at 9 o'clock, it has to be posted by at least 9 o'clock 3 days prior. So 8 o'clock technically is probably okay. For meeting materials, all meeting materials have to be distributed and attached to the posted agenda, or when the committee receives them. And so they'll either be attached to the agenda, all the meeting materials, or if there's a late meeting material, let's say this meeting was agendized a week ago. Yesterday, if I circulated a PowerPoint presentation to you all, I would have then had to publicly post it at that time. And so it's actually, I can actually post it up until the time of the meeting and even certain circumstances after the meeting. But what'll happen is if it's late, what I'll do, if we had wanted to do this and publicly post the PowerPoint instead of me just orally telling it to you, what I would do is I would literally take a copy out and put it out in the Welcome Center where the agenda is publicly posted and add it to the meeting materials through that, and then we would add the online version as well. But since I'm doing this all verbally, you know, they're just my notes. The last one I have is action items and order of events for action items. And this was not something until about a year ago that we actually had as part of these OML trainings. And I thought that it made sense to tell you the order of event for an action item and how action items are done, because it helps you anticipate when it's your turn or your role to speak up and, you know, be involved in the process. And so the very first thing that happens in an action item is the chair calls the item. So Mark is the chair. He would call, this is item 2.02 of the agenda, discussion and for possible action on whatever the actual item is. Then there'll be a presentation by staff, just like I'm up here now. And then there'll be a period called consideration of the item. And that's the consideration period is after the presentation or even sometimes during the presentation, where it's your turn to ask me questions. And so that's consideration. After you have gotten done asking me questions, that's when public comment is generally called. And so you'll ask the presenter all the questions, then there'll be a general call for public comment. And then after a public comment, there'll be deliberation where it's no longer discussion between the members and the presenters, it's the discussion between the members alone. And so it's you all bouncing ideas off each other, talking about what I had just presented on, deliberating about towards a possible action. And once you all are done deliberating, there'll be a call for a motion unless someone just makes a motion. And then once that's done, there'll be then a second round of discussion on the motion. Well, they'll, you know, Mr. Kirst, this was his motion. Here's what I think about the motion. Maybe something needs to be added to it. Maybe something needs to be changed, and that sort of thing. It's your turn to give input on the motion. After that, if there's no substantive changes, there'll be a call for a second. And then there'll be, if there's, yes, I second the motion, then there'll be a vote taken by the entire membership. So, like again, I like to include that in there so you know what's coming on an action item, and you know just generally how it's, you know, this is a little more Robert's Rules of Order than it is OML, but it's about a public meeting, so it is, you know, it is germane. So with that, that does kind of wrap up and conclude my round the world trip on OML. Any questions?
Yeah, Kevin, I did have a question. So I guess I'm used to, this was really helpful, but I've been used to calling for a motion and then seeing if there's a second and then having discussion. So that's not the proper order. Is that?
There's nothing that's illegal about it. I would say that how it probably functions smoother to do it, to call for deliberation and then the motion. There's a lot of times where deliberation and discussion will spill over into themselves, and one will look a lot like the other. I don't think, there's nothing wrong about it, but, if you follow the kind of the natural chain of events, I do think it makes more sense to have a deliberation, discussion among yourselves, and then make a motion based on that deliberation. And then there'll be a discussion on the motion that's made. So I do think it makes sense, but I don't think there's certainly nothing that would violate the OML about doing either.
Okay.
Jeff Kirst, so you would say the agenda item, the chair would say, let's have some discussion about this agenda item, and then the chair, once the discussion is over, then the chair would call for the motion.
That's correct. So once, during the deliberation, someone could just make a motion, and that does happen. Or if clearly there's no more deliberation and no one is saying anything, no one has their lights on, it's quiet, it seems like there's a direction, then it'll be up to the chair to call for a motion at that point. Do I have a motion?
But we're not going to be having any deliberation on anything that isn't on an agenda.
That's right. Yeah, exactly. Because it has to be, you can't deliberate on anything that's not on the agenda because the public doesn't have notice of it. And so that would be a separate OML violation if you started talking about that. And there's other little exceptions too, but that's generally the gist of it.
Mary Lamont, the public has to go to the district website and find out about this, or how does a public note even come here?
Well, it is publicly posted on our website, and so they could see it just how Mindy scrolled up through the calendar. That's a public website. It's publicly posted. It's publicly posted in the Welcome Center too. So that does satisfy it. If someone would email us and say, hey, we want to please add me to your distribution list, your electronic distribution list, we would have an obligation at that point to send them a copy of the agenda going forward. I did this the other day with the state board. I asked, please add me to your distribution list for your agendized meetings. And I got an email right away saying, yes, I absolutely can do that. They're actually required to do that. And so if you ever want to get on a state board meeting agenda where you get them sent by your email, just ask. They're required by law to send you the agenda for every meeting that comes out.
I think that, besides the error sometimes people make of including more than one other member of the committee in an email, right? And that I can see, it's just an honest mistake most of the time. The most common, I think, error many times is just going off the agenda item, right? And, it's not maybe even intentional on any of our parts, but it's easy to get, oh, let's talk about this. And as Kevin's saying, you kind of got to stick to the wording of the agenda item. That's your guide. And that's one of the reasons why Kevin is here too, right? That Kevin, if he hears that happening, can stop us from making a violation, right? But I think it's easy to fall into that many times. It just seems natural, but then you're not giving the public the opportunity to know ahead of time that was going to be discussed.
I think Chief Mathers is absolutely right. Those are really the two big, for this committee, it's the two big likely pitfalls you could run into is inadvertently copying or, another member on an email or a text message talking about something. And again, it's better just to communicate with the chair, communicate with the staff liaison. That's the cleanest way to do it and the most protected way to do it. And then just staying within the agenda title. And it has to be germane and related to the agenda item. And so if you're talking about unaudited fourth quarter financial results, you know, talking about whether we should use a new fund manager in the future or whether we should do something else, that wouldn't be germane to the unaudited fourth quarter financial results. And so for this committee, just make sure you really stick with the item. And if you want a new item on there, that's when you work with the staff liaison to get it noticed and put up.
Okay, any other questions? Well, this was most helpful, Kevin. I just always think it's great to be reminded of the do's and don'ts of open meeting law, so thank you.
Absolutely, thank you. And any questions, shoot them as an email to me, but don't copy your other members on the email.
Great, thank you. So, we just heard how we can take agenda items out of order, and I'm going to use my prerogative to do that. We do have a guest speaker, Mr. Rick Combs, formerly of the Legislative Council Bureau, now is the liaison for the Retirement Benefits Investment Fund, managed by PERS staff. One of the themes, I guess, of this meeting is one of education. And so, by virtue of the fact that we got approval to make investments outside of our BIF, you know, and there are a number of requirements that go along with that. We have to have an investment plan. We have to review that investment plan annually, and we also need annual education. And so we thought it made sense to start with you know, an education item on the RBIF fund, and we still have $21 million in the RBIF account, and for all of us to learn a little bit more about that account, how PERS manages it, you know, the restrictions you all operate under, just so we have a better understanding of how that portfolio is managed. So we asked Mr. Combs to come. He's been gracious enough to come here this afternoon. And so I will take agenda item 2.06 now. Again, this is just for presentation and discussion, no action item here. But I know this will be helpful for all of us. And certainly if we have any questions, I know Rick could happy to answer those questions after his presentation. So with that, Mr. Combs, again, appreciate you coming here and looking forward to this.
Well, thank you for having me. For the record, my name is Rick Combs. I'm the contract administrator for the Retirement Benefit Investment Fund. As the chairman said, I am a PERS retiree from a 27-year career at the Legislative Council Bureau, which is the nonpartisan staff that serves the legislature. So that's kind of what I am. What I am not is a financial expert. Investment expert, I guess I should say. I am not. And the reason for that is, as you'll see as I go through the slides today, the Retirement Benefits Investment Fund was a vehicle that was kind of put in place by the legislature to give local governments and the state public employees benefits program an opportunity to invest in stocks and bonds that they might have otherwise been prohibited from investing in under the Constitution by creating these separate boards that are overseeing these trust funds. And one of the statutory kind of provisions they put in at the time they created it was that the money that's invested in the Retirement Benefits Investment Fund has to be invested the same manner that the PERS retirement funds are invested. So it really isn't on the RBIF side, the Retirement Benefits Fund side, a matter of making decisions about how to invest money, because those decisions are just a natural occurrence based on what the PERS board does with the PERS funds. It keeps things simple. It also keeps things cheap. And on the other hand, though, it isn't real adjustable. And I think that's probably part of why this board made the decision over the last few months to move some of its funds that it had deposited and generated in the fund to other sources. So we'll go through that in detail. The next slide is how the fund was created. It was through SB 457 of the 2007 legislative session. The main two sections of the bill are codified as NRS 287.017 and NRS 355.220. The bill back in '07 was requested on behalf of the Committee on Local Government Finance. On the next slide, I'll give you a little bit of information about why the Committee on Local Government Finance requested it at that point in time. GASB Statement 45 had come out not too long before that, and that was a big hullabaloo because it meant that government entities were required to include on their financial statements their unfunded liabilities. And in order to offset those unfunded liabilities, you had to have the money set aside in an irrevocable trust so that you could show that on your balance sheet as well. You wanted to offset those liabilities, what assets you had set aside for those. And so as part of that whole discussion and time occurring, what also was rearing its head was, as I indicated earlier, the Section 10 Article 8 of the Nevada Constitution basically prohibits local governments from investing in stocks of corporations. And so that provision and other provisions kind of limit local governments and what they're able to go out and do. And so it was the idea on behalf of the committee was, hey, let's create something that kind of takes that outside of the local government, creates another entity, the OPEB trust board, trustees, however the various boards have named themselves, but basically a separate entity outside that will make these decisions about how to invest these funds. And as one of the options we will give them is the Retirement Benefits Investment Fund. The next slide, the OPEB trusts, what you all are, and I affectionately refer to you as the OPEB trust just because we have 12 of them and they're all got a little bit different naming convention, but this is you. And it basically authorized the creation of this body to manage funds for OPEB benefits, so life, accident, health insurance, whatever it is that the local government offered its employees at the time. The Board of Trustees acts in a fiduciary capacity for the beneficiaries, and the reason I point this out is not because you don't already know it, I'm sure, but we don't act as one at RBIF, so that's kind of on you guys, that you're the ones acting in the fiduciary capacity for the beneficiaries of the trust. The funds placed in the trust have to be irrevocable, and they have to be used for providing benefits and paying reasonable administrative expenses incident to providing those benefits. So once the money goes in to the fund, that's what it's allowed to be used for going forward. As I indicated earlier, the second part of the bill was the creation of the Retirement Benefits Investment Fund. SB 457 created it basically to provide an option for investment of funds by OPEB trusts that could earn a little bit more, and I said could earn, that isn't a guarantee, but could earn a little bit more than what local governments might have been limited to prior to the creation of the investment fund. And again, it's only one of the options that are available, and this board has selected other options for investments of part of its fund. And as the chairman indicated, you still have just a little under $21 million, I think, available or actually sitting in the Retirement Benefits Investment Fund. And again, as I indicated earlier, the money invested in the fund, though, has to be invested in the same manner as money in the PERS fund. And again, I think this was done for a number of different reasons, but primarily for simplicity. It was done to make sure that the costs, administrative costs, didn't get out of hand. And it was because I believe there was some faith that PERS had been, succeeding in its mission to make sure there was sufficient money payable for PERS beneficiaries, that there was some sense of, okay, well, we're not going to have these local government entities or the state public employees benefits program going out and investing in things that end up causing them to lose all of the money they have set aside for these benefits. The RBIF management, as the chair indicated, the board, when it was created, the board was, I'm sorry, I got a little off track there. I just want you to know that it consists of the same members as the PERS board. So it's not, it is a separate entity legally, but it is made up of exactly the same members. Just to let you know, the regular meetings are held upon adjournment of the monthly PERS board meetings. PERS board meets monthly. The Retirement Benefits Investment Board meets quarterly in February, May, August, and November. And then there's also a very short meeting in October to receive and approve the financial report for the year from the auditor. Continuing on with management, it's held for investment purposes only in RBIF. It's not held in a fiduciary capacity. RBIB's authorized to employ staff and contract with vendors for provision of management, investment, and other services. And we're authorized for that to assess certain charges against the fund for administrative expenses. From its inception until October of 2020, the board pretty much directed PERS staff to handle all the administration. In October of 2020, they did make a decision to bring on a contract administrator, and that was me. Now, I am extremely part-time in this role, and I'm extremely inexpensive. And that is important simply because if you're going to have your PERS director and your investment officer at PERS and your deputy directors and your legal counsel and everybody else involved in this, then the costs are going to go up. There's just no way that it wouldn't. And they hope that by hiring a contract administrator, we could avoid some of those costs or at least reduce them. But it's important to note that the investment, legal, and accounting services are all still provided by PERS staff. And again, that is really out of a sense of what makes sense just on a day-to-day activity. It would be hard to have outside people come in and do this without giving them access to everything that the employees at PERS have, and for obvious reasons, PERS doesn't necessarily want to do that. So that's why they've chosen to go the route they have chosen. The next slide, I just wanted to give you a little indication of what the costs for the fund are, and when I have presented before other boards like this, I've gotten some shock from this because it really is pretty insignificant when you consider what it costs to invest funds just as an individual investor using some type of a professional. So the investment fees in FY24 totaled 1 basis point. So that's 0.01% of the assets were spent on investment fees. The way that can occur is they use 100% index management, and they benefit obviously from the multi-billion-dollar assets that PERS has set aside and the relationships that PERS has developed with investment managers, and RBIF gets the benefit of that, long and short. Administrative expenses for this FY 2025 totaled almost $118,000. Again, that is covering all of the PERS accounting staff's time, the PERS management time, the PERS legal time, and my compensation as well. The use of PERS staff to perform the investment, the accounting, and the legal function keeps those administrative costs at a minimum. On the next slide, I just provided you a list of all the current participants in the fund. In 2021, the State of Nevada Public Employees Benefits Program removed a $2.2 million that it had sitting in the fund for other purposes at that time. It had, again, to be used for the state's employees' post-retirement benefits, but they elected to use those funds differently due to some financial concerns at the time, so they're no longer part of the program. So since 2021, this has been a local government municipality type fund and no longer includes the state. On slide 10, I just provided you with a table that shows the market value of assets in the fund as of the end of FY 2025. The assets totaled at that time $928.9 million. The table also demonstrates the fund's returns for FY 25, the past 3-year, 5-year, 10-year periods as well, and then through inception as well. You'll see the fund started in February 1 of 2008 was the first investment that occurred. So it really, when you consider that the Great Recession had started by that point, it really is actually excellent timing when you look at the returns, right? Because we didn't have people sitting in the fund with tremendous amounts of money when the recession hit, but they started adding money during the recession and more money after the recession. So the returns have been very impressive, obviously, and again, the low costs help with those returns as well. You'll see for FY 2025, the total fund was 11.7% to the good. So that's a really good return. Over all of the forecast horizons, all those periods, it exceeded its target, except probably the inception date. But again, the inception date would have been, it's difficult to go back and see that does cover part of the recession. But since then, the returns have done well in almost double digits in every time horizon. So now, that being said, obviously there is some risk associated with the fund, and timing is everything, right? I mean, if you had planted this prior to the Great Recession and looked at it, it would look probably very much different. And this board is very educated, very comprehensive in its what it does, but we have some that are of smaller local government entities that were surprised one quarter when their amount went down, their assets went down, and they called and they said, why? And it's like, well, it is an investment with risks associated with it, and in short time periods, you are going to see losses, and it is being invested for a long-term horizon. The next slide is this table demonstrates that the simple and the low-cost structure of the fund has performed well on a relative basis as well. The table compares RBIF's performance over the past 3, 5, 7, and 10-year periods and since inception to a database of comparatively sized pension funds. And RBIF ranks within the top decile or better over all the periods. And this is something that the PERS staff does, PERS investment staff does for PERS, as well as for RBIF, as well as the judicial retirement system and the legislators' retirement system. It looks to make sure that they're performing as well as possible compared to their peers. Just briefly to go over the investment objectives. Invest in a diversified portfolio with similar asset allocation that produces long-term total return and objectives consistent with the PERS fund. Invest so that short-term volatility will not cause an alteration of the long-term strategy, and keep it simple. Make the program simple and make sure that you can control the ability to meet your long-term returns and risk objectives. Now that's RBIF. I want to point out for PERS on the next slide that there is where the primary goal of generating a 7.25% long-term annualized return is. And so because we're required to invest the RBIF funds in the same manner as the PERS funds are invested, this 7.25 long-term annualized return goal with the least possible volatility is the goal that is basically imputed to RBIF then too. So if you were a board who was really well funded and that was too much risk for you, there's no ability for us to change that. So that would be when a board would start thinking about, okay, are there other options that we want to consider rather than investing in the Retirement Benefits Investment Fund? I think I'll leave that at that and go to the next slide, which is just the investment philosophy. We want to maintain consistent exposure to capital markets and systemically buy low and sell high. Want to emphasize again, a simple low-cost structure that relies primarily on intelligent asset allocation and rebalancing. I'll go through that more in a future slide about the rebalancing, but on the next slide you'll see that there is an asset allocation table there. So right now for RBIF, the Judicial Retirement System, and the Legislators' Retirement System, the target for the percentage of assets in each allocation category are listed there in the table. It's 44.5% for U.S. stocks, 18.5% for international stocks, 34% for bonds, and then 3% in some short-term investments. There's also rebalance triggers, so that if because stocks outperform some of the other allocations, they can get out of whack, and we want to be able to have some guidance from the PERS board about when to rebalance. That's how PERS would do that. The same thing applies to RBIF. And so it's kind of managed that way again, and that goes back to the simplistic comment earlier. Saying that it's simplistic doesn't mean that there aren't intelligent people involved and they aren't making decisions. It just means that we are setting a structure in place that uses indexes and uses rebalancing triggers and asset allocation amounts to try to keep the fund on track. The next slide just is, I talked on the previous slide about the allocations. The U.S. stocks portion of the fund it's invested 100% in an S&P 500 index fund. The international stocks are 100% MSCI World X USA Index, and the U.S. bonds are invested using the Bloomberg U.S. Treasury Index. The indexes are fully replicated separate account mandates, so they're tracking those indexes in a way that we make sure that we're, no one's making any decisions otherwise to place more importance on one holding or another holding. It tracks the index. The last slide I wanted to go over is just probably not so much for you as board members, but just wanted you to know briefly that there are some requirements that we have about how monies are added to the Retirement Benefits Investment Fund and how they're withdrawn from the Retirement Benefits Investment Fund. And the one issue that might come up for you guys in a board meeting at some point would be that we, just to make sure that we're dealing with people who have the authority to make these decisions before we move money around, we do ask that you have a list of authorized representatives that's been voted on by the board as an official agenda item, and that you guys perform that function. You say to us, here's who you should talk to and listen to, don't listen to anyone else, basically. Contributions, we ask that one of those authorized representatives notify the RBIF contacts not later than the 5th business day before the end of the month, and that the funds are received not later than the 2nd business day before the end of the month. Now, the deadline is just to make sure that it's all happened by the end of the month, not that you have some kind of restriction on it. But withdrawals, it's, again, notify the contacts not later than the 5th business day before the end of the month. There's a more detailed list of instructions that's provided to the staff that assists with the day-to-day work. but I won't go through all the various components of that, and I hope that's sufficient for this purpose. If you have any questions, I will do my very best to answer them. Again, not a investment expert by any shape, but I have sat through a lot of PERS board meetings as a result of taking this responsibility on, so I would do my best.
Go ahead. No, please.
Jeff Kirst, question on page 9. In the case of our funds, we have a closed loop of people. In these other participants in RBIF, are any of them closed loop, or do they add new people to it constantly?
Yeah, I think it's a bit of both. I won't say for sure. I know there are other entities that have a closed loop. Our biggest asset holder is Washoe County, for instance, and they have closed off their benefits to new retirees or new employees. If you're a retiree at a certain point, you are able to get in, or if you are hired at a certain point, you're able to receive a subsidy for health care benefits, for instance. Hired after that point, you're not able to. And so I know Washoe County's that way, and I believe Clark has also closed theirs off too, and they're the second biggest asset holder in the fund. So that seems to be the way that local governments and, quite frankly, the state have handled the costs and the inflation associated with the costs of those benefits.
I mean, and sorry, Mark Mathers, I mean, it is interesting. I don't believe, for example, Truckee Meadows Fire Protection District is a closed system. I think all of their employees are eligible for these benefits, and yet they don't appear to be having set up a trust that's sending money to RBIF to hedge against that future inflation of those liabilities. It's just, I don't know. It's kind of, I always find it interesting to see who has an OPEB trust and who doesn't, right? Like, you don't see Clark County School District here, but I don't know, maybe they had one and pulled money out? Is that what they did?
I know they're handling in a different method,
Okay.
in a different manner, whether that is by paying as you go or having set up a trust that doesn't use RBIF. I'm
Right.
not sure.
Right. Yeah. And I want to make sure we can see Alex in case he has questions. I guess it is more of a PERS question then, since RBIF kind of shadows PERS asset allocation. But I do wonder, was there ever a time that PERS had exposure to commodities or real estate, which are, you do commonly see, right, as inflation hedges or just as part of a diversified institutional portfolio? Did they ever have exposure to those asset classes?
Yeah, the short answer is they currently do.
They do?
Yes, PERS does.
Per-
PERS
Okay.
invests in private markets
Right.
in two ways. And their allocation towards that is about 15% currently, I believe, and 5% to real estate.
Okay, I didn't know
And
that.
10% to private equities. The reason RBIF, the judicial retirement system, the legislator's retirement system don't follow PERS in that manner is simply the size of the investment pool. PERS's real estate investments, for example, they own buildings.
Yeah.
They actually own buildings. And so you would be hard pressed with, under $1 billion to find a good way to diversify your private equity portfolio in a way that would be good. Plus, the costs would be pretty exorbitant to try to get someone to design that portfolio. And then on top of it, you're also in a situation here, unlike PERS, where the Washoe County School District could tell us tomorrow that they want their $21 million, and we've got to come up with the $21 million. So if you were in private equity, even private equity, but especially private real estate, that would be a really difficult thing to be able to do, to go sell a building so we could give you your money that you're entitled to back. So it just is, and it's similar to the judicial retirement system, which is for district court judges and Court of Appeals and Supreme Court justices. That's a small group of people. The fund is kind of in the same class as RBIF is in terms of its assets, and the same for the legislative retirement system as well. Just because of the size of the funds, we don't invest them in the private markets.
Okay. You're right, there's definitely liquidity considerations there. I guess similarly, do you know, I mean, I imagine PERS invests in fixed income other than just simply U.S. Treasuries, right? That they would have exposure to corporate bonds and other fixed income securities, wouldn't they? Or are they purely into treasuries as well?
The 3% allocation towards short-term investments is really towards treasuries as well. It's just shorter-term treasuries.
Right.
And that 3% has been recently as high as 12% allocation. The board, the PERS board took an opportunity when interest rates were higher to try to get some of the risk out of its portfolio for at least a period of time. And so it did that, and it turned out to be a pretty good move on their part. But I think as interest rates and the talk of interest rates starting to decline again, they have moved back to the 3% level rather than the 12% level that they had it at in short term. So, and that's really just a matter of shifting it from short-term bonds to long-term bonds in the PERS portfolio as well.
But I guess, you know, that allocation to U.S. bonds is just treasuries, and I've always wondered, you know, why not exposure to other bonds, you know? And I didn't know if PERS did that or not.
I can't speak historically at all. I know right now that is not the case, but I cannot speak historically. But I'll ask the investment people at PERS and get back to you, Mr. Chairman.
Okay, thank you. Any other questions? Okay, thank you so much for coming. We appreciate it. You know, again, we maintain a.
Actually, hey, Mark,
Yeah, Alex.
this
yes.
is Alex. I had one question. Apologies for hitting the unmute button late. Question on page, I'm not sure if it's the asset allocation. First of all, there are a lot of great things about this portfolio, the low cost, number one. I guess I'd also note that I have two questions. Number one, how does management staff feel about achieving a 7.25% long-term gain with a portfolio that's 34% fixed income?
Well, all public pension funds out there are obviously struggling with the bond market and where it has been, you know, for quite some time. And, you know, quite frankly, what has happened recently, I think, has been a relief to the investment managers at PERS, just that there's been a little more normalcy in the bond market. But it definitely puts pressure on the PERS board to have a higher percentage in the U.S. and international stocks than perhaps they would like. If you could generate a certain percentage of your 7.25% off of the bonds, then that would be, you know, much less risky. And so just some history, the discount rate used to be 8%. And then because of the bond market and where we've been, the PERS board made the decision to lower that to 7.5% at one point. And then not too long ago is when they went from 7.5 to 7.25. So it is part of that concern about being able to generate the level of returns that we have in the past, that has come down. You know, again, following, you know, past performance doesn't predict the future, obviously, and I think that's your point, is that, okay, you guys have met the 7.25 in all the time horizons. What about the future? And you know, they do the best they can. They meet monthly. They get investment reports quarterly from the investment advisors, and they make the best decisions they can about the allocation targets given the information that they receive.
Okay, thank you. The second question that I had basically on the asset allocation was, it's a pretty, obviously dominated by US stocks, specifically S&P 500 large cap stocks. That's been a pretty big tailwind for quite some time, or at least I would expect that, and I think it probably shows up in the data. A little light on international, and doesn't seem, unless I was missing something, much in the way of small cap. Or across the asset allocation spectrum. I was just wondering if you could sort of comment on that, please.
Just a reminder real quick that nothing specific to RBIF has anything to do with whether it's small cap, S&P 500, or wherever, but going to PERS as a decision as to why they make the decisions they make. They place a pretty high emphasis on high quality assets throughout the portfolio, and over the years they've evaluated alternative stock indexes like the Russell 2000, but ultimately they've determined that the incremental risk, the expense, and the reduced liquidity of using an index that includes small and mid cap stocks isn't warranted for what they're trying to achieve and the high quality bias that they're placing on it. And that's kind of been their decision making. That being said, again, I was at a PERS board meeting, I think it was 2 months ago, where they had hired a consultant to come in and talk to them about their system, their investment portfolio, and to get advice from that company on things they should be thinking of or not thinking of. And obviously one of those was exactly what you've mentioned, which is do you want to start getting exposure into small and mid cap stocks? Because again, the future isn't any predictor. I mean, the past isn't any predictor of the future. And although large cap stocks have probably outperformed mid caps and especially small caps for the recent future, is that likely to continue? And so they have not made the decision in recent times to invest in small caps and mid caps to any large degree, but it is something that they consider, and that could change as they go through their process. If it changes for PERS, then it's going to change for RBIF as well. Rather than RBIF using the S&P, it would go to some other index that included small caps.
Thank you.
Great. Any other questions? Okay. Thank you very much, Mr. Combs. Appreciate it very much.
Thank you all for having me, and I just want to say if there's anything you need from my end, please let me know. We generally, through this arrangement, have tried to keep as much pressure off the investment advisors at PERS and the director at PERS, and so if you come through me, I can make sure I get the question to the right people and make sure we get you an answer as quickly as possible. And I do really appreciate you having me today. It's always good, I think, to know the people that you're working with and to get a chance to meet them. And I wish you all the best of luck in your deliberations with your funds.
Okay, we will go back then to agenda item 2.03. This is presentation and discussion of our unaudited fourth quarter financial statements. We're in the process of getting to the point of having audited financials, but these are unaudited numbers, although they shouldn't change much or any, for the period, again, ended June 30th of 2025. This is for presentation discussion only. And so Mindy will walk us through a couple reports here.
Thank you, Mindy Capron for the record. I'm looking at, looks like page 8 of 42 in the presentation you have. And this is the statement of net position assets. You can see we have 3.1 million in cash equivalents, which that's in money market fund. And then RBIF, as we just discussed, almost 21 million in RBIF still. And then in US Bank, we have, excuse me, 69,631,000 in that investment. So if you go to the next page, statement of revenues and expenditures. So this is the blended look at the two funds together, or the two investments. Earnings on investments was 1,069,000. Realized gains was 1.8. Unrealized gains is actually 1.2. So that's a positive number. And then contributions by employer was 2.3. So our total revenues for the fund is 6.492 for the year of 2025. The total expenditures show 4,973,000. And I just want to point out, in June, you approved up to 5,136,000 to be brought in to the fund as an expense. And that total was actually 4,893,483 that we brought in there for the PEB expenditures, the retiree medical, and then the retiree life. So it was under what you had approved, but it shows in this expenditures number. So the change in the net position for the year was 1,518,000. So overall, the net position as of June 30th is 93,754 million.
Just as clarification, there was, I think, a revision to the financials, but we're looking, I think, at the older version, so there's a delta here of $20,000 in terms of what you're reporting versus what we're looking at.
Oh, I'm sorry.
Yeah, it's not your
Okay.
fault. It's just the updated numbers didn't make it into the packet, so
Okay. Yes.
that's why I see my fellow committee members kind of scratching their head a little bit.
Looking at me like I have,
Yeah.
sorry, I'm sorry
Yeah.
about that. All right, so then the next page with the RBIF account, it breaks down the details of the gains and losses, mostly gains for the year. Trust expenses shows there for 7,286. So the change in the net assets was 4,363,000. So it gets us to the 20,933,000 for RBIF. And I guess I could look at the sheet that's up here to kind of match things, but, and then US Bank is the last page of this. And you can see they had interest income, unrealized gain or loss was 496,000 loss. The trust expenses there was 29,000. So the change in the net assets for the US Bank investment is 221,000. And then we, obviously the next section, we moved the cash to RBIF. We had money in Wells Fargo that we've closed and put in this fund. And then overall, the 8.9 million, that's the money that we've been approved to move from this fund back to the school district to cover those other items that you had approved. I mean, over That's a or a fund-to-date number there from the beginning of time of what we've moved out of there. So that leaves their net assets at 69,631,000.
Okay. Any questions? Okay. All right, our next agenda item is agenda item 2.04. This is the presentation discussion of the quarterly investment report, again, for the period ended June 30th, 2025, for presentation discussion only. And with us is Ms. Tara Hagan from Buckhead Capital Management, our asset manager, who will walk us through quickly this report.
Good afternoon. Thank you, Mr. Chair. Tara Hagan with Buckhead Capital for the record, and I am on page 13 of the packet. This is just a quick snapshot of the trust portfolio, the investment portfolio as of June 30. You can see in the upper left-hand corner, the total market value as of that time period was $90.5 million, essentially, with a market yield of 4.265. So we'll move on to page 14, and that's where you have the 3 different accounts. And so these 3 different accounts, the strategy aligns with the board's investment strategy of these accounts. And so I'm gonna skip over this one, and we'll talk about each of these accounts just quickly. So the first one on your next page, page 15, that's your matching account, and that's obviously a little bit over 75%. And just as a reminder, that's the investments that have the zero coupon U.S. Treasuries. And so those have those face values and maturity dates that are going to match up to those expected medical subsidies for eligible retirees. So, and you can see later on in the packet, you did have in May a maturity of about 5.8 million. And just the staff was just talking about, some of that was then moved over to cover those fiscal year 25 expenditures, and you do have a little bit more in that liquidity account. So that's the bulk of the investments are in the U.S. Treasuries with the U.S. coupons at a little over 75%. The next asset allocation percentage is about a little over 23%. I won't belabor the RBIF account. Mr. Combs did a fantastic job, so that's the information there on page 16. We did just add, just so you can get an idea of the growth of the RBIF since you moved monies out to the matching. So you can see at the bottom of slide 16, the 19.7 valuation as of 9/30. That's now 20.93 as of 6/30. So just to give you an idea of the growth of those excess monies in the RBIF account. And then the smallest percentages you could expect is that liquidity portion. You do have about 1.2 million in the liquidity, a little bit higher than it was last time we met on March 30. And just the staff, my guess would be that's because you didn't need that entire 5.8 million in the maturity, so just a little extra in that money market. And just a quick note on the money market, you'll see that it was yielding as of June 30th the 4.22%. As you know, the federal fund rate did drop 25 basis points or 0.25% last week. So just as the yield as of now is closer to 4%. So just to give you an idea of that direct correlation there. And then just touching on performance on page 20, you can see, so quarter to date would just be your second calendar quarter or fourth fiscal year quarter is almost 2% in the performance. And then year to date, so January through June 30, 5.26% on the performance of the fund. And then lastly, I just want to bring to your attention, because normally this page is blank, but page 23 of your packet, you can see you have credit events there, and quite a long list of credit events, because as you may recall, in May, Moody's, one of the 3 bigger credit rating agencies, so Moody's, Standard & Poor's, and Fitch, Moody's is kind of the last holdout of the rating agencies that drop the rating for U.S. governmental debt from the AAA down to the AA. So you will see that's generated this credit events because now all three rating agencies have downgraded that U.S. debt. And with that, that concludes my presentation, but happy to take any questions.
Okay, I'm waiting for Mr. Kirst maybe to have a question.
Jeff Kirst, one little question. Why are our pages different than your pages?
I apologize, I took these from the website. So.
Yeah, it's because your district CFO had to put this packet together this afternoon because of the absence of my executive assistant. That's really the short answer. So we do our best, Mr. Kirst, but no job too small for the CFO. So. All right, thank you, Tara, appreciate it. Okay, that brings us to agenda item 2.05. This is for presentation and discussion. And this item, so again, I mentioned one of the annual events our board now has to undertake is an annual review of our investment plan. And so it's been a year since we formulated the investment plan that was submitted to the Committee on Local Government Finance, was approved, that allowed us to withdraw the $77 million out of RBIF and invest it in the U.S. Treasury strips that we do as a portfolio immunization strategy. So, I mean, time flies. And we plan then to bring back that investment plan for discussion at the December meeting. But there's a lot that goes into the investment plan, right? And so I guess really the intention here is to ask committee members whether there are any specific topics here, whether it's in terms of asset allocation. We had some questions from Mr. Combs along those lines, or any aspect of the investment plan that you would want to probe, ask about, have staff, have Buckhead look into ahead of that December meeting, so that we can be prepared and ready to discuss that with the committee. And so maybe just again as a refresher, maybe you don't need it. If you don't need it, just stop me. But again, the investment plan formulates kind of our strategy here and the establishment, creation of 3 different accounts. For lack of a better word, one of those accounts is what we call our matching program, and that's where we are immunizing the portfolio. So we, again, had an actuary project out future medical subsidy costs over the next 30 years. And then essentially we are using those zero coupon U.S. Treasury strips to defease those liabilities over time. And so that's what the purpose of the matching program is, and we've done that. Last year, Buckhead bought all those U.S. Treasury strip securities out 20 years to, again, match off against projected liabilities. Good timing. We saw yields that were equity-like at the time, 6% plus. Again, the idea was we wanted to take our chips off the table, given that we were overfunded, and exit the equities market to the extent we thought was reasonable at the time to protect those assets. Then the second account we created, was the liquidity account. This is, again, invested in a money market fund, a government obligations money market fund, just so that we can pay the bills. And so there shouldn't be much money in there at all. And then the remainder is cleverly titled excess monies in the investment plan. And we've left that with a retirement benefit investment fund. And so that's why we brought them here talk about that account. And so we've got still quite a lot of money with RBIF, 21 million. That is, for lack of a better word, meant to address or hedge against medical inflation costs going up further or faster than our actuary projected. And so, right, he projected future medical costs for those subsidies going forward for 20 years, but if he's wrong and medical inflation's higher than what he projected, these are the monies that could be used to kind of supplement what's in the matching account. So, again, that was the strategy here, which is, you know, shared here in the investment plan. The committee can make decisions about adding additional asset classes that are allowed in law, and we are restricted by law to only certain asset classes. We cannot invest, for example, in real estate or commodities. But, you know, but again, there's an opportunity to look at different sub-asset classes here, or, you know, probe other issues as allowed by law, I guess I would say. State law would allow us to kind of freely invest in our own equities portfolio using an outside manager if our assets exceeded $100 million. They are 7 million shy of that threshold. So if we, however, we can appeal to the Committee on Local Government Finance for an exception to do that if you are under 100 million, which is what we did last year, and got approval to do that. So just kind of wanted to lay out those parameters to you, but I just would open up the discussion to you all to hear whether there are any particular issues or questions you would like to have addressed for that annual investment or annual review of this investment plan next meeting.
Jeff Kirst, we have the portfolio with the maturity dates
Yes.
pegged for the need. I would still like to know how many people are actually in that actuarial table.
Okay. All right. Well, okay, we will do that. We will do that. I think the confusion we had when we looked at the financial statements last time is technically, so the OPEB trust includes an actuarial accounting of the implicit rate subsidy on life insurance policies retirees can procure through the district. And so there's far more, right, there's active employees with exposure and that have life insurance policies. So when we talk about the life insurance side of it, that's why you would see the active employee counts in there. For the medical subsidies, clearly that's a much smaller number, and those are only retirees. So I think what you want to know is how many retirees are receiving the the health insurance post-retirement benefit, correct?
Yes, at our last meeting, I received later a wonderful description of the 5,900 people who were
Right.
in the life insurance, but some of them were also active
Yes.
employees.
Yes.
The number that I was looking for was the number of people who are in need or use the medical side of the trust.
Yes.
Because as we have discussed several times, the school district has to come up with the money for the medical side, but does not have to come up with the money for the life insurance side, should there be some type of a pinch down the road. So the number of people that are eligible for the medical is the number that I would like to at least have for our discussion at the next meeting.
Okay. Very good. We will get that for you. Alex, I just want to make sure, you know, we get down any particular questions or areas of interest you'd like us to focus on for the next meeting?
So I think all the fixed income and the immunization is entirely appropriate. It sounds like we don't have the opportunity to change anything if we wanted to outside of for RBIF. Is that fair to say? Absent being below 100 million.
I do believe there is a provision where we can go back to the Committee on Local Government Finance and ask for, which is a state committee, ask for their waiver of that $100 million threshold. If we wanted to withdraw from RBIF and have the ability to make our own investments in the equities market, I mean, we can do that. I don't know, again, what their answer would be. But I do believe that we have that ability to ask for that. If we were over 100 million, we wouldn't need to ask. We could just do it. So, yes, we can ask. Right? So in December, if we wanted to talk about the construction of the RBIF account and whether that makes sense for our specific situation and whether there's an interest to pursue such a thing, Alex, that's entirely appropriate.
So my follow-up question would be, I mean, as I see it, the RBIF portfolio has a lot of great things going for it, specifically how cheap it is. My concern would be, and it could be unfounded, that long-term, it's overweight large cap domestic.
Right.
And might be appropriate to not replace it, but supplement it. And if we wanted a different asset allocation with other, I would still use index-based ETF, low-cost approach. But if we might consider supplementing it with other asset classes, specifically small cap, or considering an overweight relative to what RBIF gives us in international.
Okay, got it. Great. That's what we're looking for. Just, kind of the questions you would have at a future meeting so that we could be better prepared. So thank you. Any other areas of interest, Alex? I guess you're muted.
Sorry, there's background noise trying to avoid. Thank you for your flexibility and letting me zoom in. Generally, I think that's, the asset classes are generally appropriate. I wouldn't be too keen on trying to explore too risky or, private equity could be nice, but it was a good point that the gentleman made before that it's a little bit hard to get into at this type of scale. Commodities, I wouldn't generally think, and REITs would just be lower return type assets. So really it would be, the only ones that would specifically interest me would be small cap, mid cap, domestic, and or considering an overweight to international.
Yep. Okay. Very good. Any other requests? Okay. So we'll be prepared then to bring the investment plan back to the committee for review at the December meeting. And with that, we are done with section 2 of the agenda. We move on to section 3. Item 3.1 is public comment. Again, looked to our audience, and I see shaking a head no. Okay, seeing no public comment, then our next meeting, item 3.02, is December 16th. Please let me know if you can't make it. I hope you all can. And with that, we are adjourned at 5:12 p.m.